Have you ever noticed how the world's wealthiest people seem to understand something about money that the rest of us don't? They aren't just lucky. They aren't just smart. They see patterns where others see chaos. They understand the machine. And right now, that machine is sending us signals that most people are completely missing. Look around you. Something strange is happening in the financial markets. While everyone's been obsessed with stocks, crypto, and real estate, there's been a quiet revolution taking place in one of the oldest forms of money known to humanity, silver. The price movements we're seeing aren't normal, they're not following historical patterns. And if you understand why, you might just position yourself ahead of one of the biggest wealth transfers in modern history. Let me tell you something I learned over 4 decades of studying economic cycles. Markets don't move randomly. They breathe. They follow rhythms as predictable as the seasons, yet most people treat them like they're watching a magic show. They see the trick, but never understand the mechanism behind it. The wealthy, they study the mechanism. They learn how the trick works. Then they use that knowledge to their advantage. Think about water for a moment. When you heat water, nothing seems to happen at first. 70 degrees, 80 degrees, 90 degrees. It just sits there, getting warmer. Then you hit 212 degrees, and suddenly everything changes. The water doesn't gradually turn into steam. It transforms. One moment it's liquid, the next it's gas. This is what scientists call a phase transition. And this is exactly what happens in financial markets. For years, silver traded in a range. $15, $18, maybe 20 on a good day. Investors yawned. The financial media ignored it. Bitcoin was the story. Tech stocks were the story. Silver was just that boring gray metal your grandfather talked about. But underneath the surface, pressure was building. Industrial demand was rising. Solar panels need silver. Electric vehicles need 40% more silver than regular cars. 5G networks, medical devices, water purification systems, they all need silver. Meanwhile, mining production has been flat for years. Supply and demand, it's the most basic principle in economics, yet people forget it the moment something sheenier comes along. When demand outpaces supply for long enough, price doesn't just drift higher, it explodes. We're approaching that 212-degree moment, and most people won't see it coming until the water has already turned to steam. But here's what really matters. This isn't just about silver. It's about understanding how the entire financial system works. You see, money itself is going through a phase transition. For the last 50 years, we've lived in a world of pure paper currency. Dollars backed by nothing but faith in the government. That experiment is showing cracks. When governments print trillions of dollars out of thin air, people start asking questions. What is money really worth? Where should I store my wealth? How do I protect what I've worked so hard to build? Throughout human history, whenever paper money systems have broken down, people have always returned to the same place. Real assets, things you can touch, things that can't be printed. Gold and silver have served as money for 5,000 years, not because of tradition, but because they work. They're scarce, they're durable, they're divisible, they're recognizable. These properties don't change based on political promises or central bank policies. I've watched empires rise and fall. I've seen currencies collapse and markets crash. Through all of it, one pattern repeats. The people who understand cycles, who study history, who think in principles rather than predictions, they don't just survive. They thrive. They position themselves before the phase transition happens. They buy the water while it's still at 70 degrees. Right now, we're living through the biggest monetary experiment in human history. Central banks around the world are trapped. They can't raise interest rates too high without crashing their economies. They can't lower them without fueling inflation. They're stuck. And when the people running the machine don't know what to do next, that's when you need to pay very close attention. The silver surge isn't normal because we're not living in normal times. We're living in a moment of transition. The old system is breaking down, a new system is being born, and in between there's chaos. But chaos, if you understand it, creates opportunity. The question you need to ask yourself isn't whether silver will go up or down next week. That's noise. The question is this: do you understand the forces reshaping the entire financial landscape? Because once you see them, you can't unsee them. And more importantly, you can position yourself accordingly. Let me share something with you. In the 1970s, we experienced something similar. Inflation was running wild. The government had spent too much on war and social programs. The dollar was losing its purchasing power. People were scared. They didn't trust the system anymore. And what happened? Gold went from $35 an ounce to over $800 in less than a decade. Silver went from $1.50 to $50. People who understood the cycle made fortunes. People who didn't lost everything to inflation. Now, I'm not saying history repeats exactly. It doesn't. But it rhymes, and the rhyme we're hearing right now sounds awfully familiar. Government debt is at levels we've never seen before. The United States alone has $35 trillion in debt. That's trillion with a T. To put that in perspective, if you spent $1 million every single day, it would take you over 95,000 years to spend $35 trillion. We're not paying that back, not in real terms. The only way out is inflation. Print more money, make the debt worth less, and hope people don't notice. But people are noticing. You're noticing. That's why you're watching this. You feel something's wrong. The prices at the grocery store keep climbing. Your paycheck doesn't go as far as it used to. The American dream feels further away than ever. You're not imagining it. The system is changing beneath your feet. Here's what the wealthy understand that most people miss. Wealth isn't about having money. It's about having assets that hold their value over time. Money is just a tool for storing and transferring wealth. But when the tool itself is broken, you need a different tool. This is why the smart money has been quietly accumulating real assets, farmland, energy infrastructure, precious metals, things that have intrinsic value regardless of what happens to paper currency. Think about it this way. Imagine you're living on an island, and the island uses seashells as money. Everyone agrees seashells are valuable, so the system works. But then one day, someone discovers a beach with millions of seashells. Suddenly, seashells aren't scarce anymore. What happens to their value? It collapses. Your life savings stored in seashells becomes worthless overnight. This is essentially what happens when governments print money without restraint. They're finding new beaches of seashells and pretending nothing has changed. Silver, on the other hand, can't be printed. There's only so much in the ground. It takes real energy, real labor, and real resources to extract it. This scarcity gives it value that transcends government policy. When people lose faith in paper money, they don't lose faith in silver. They never have. They never will. But let's get practical. What does this mean? For you, it means you need to think differently about your financial future. Most people are playing checkers while the game has changed to chess. They're focused on their salary, their 401k in index funds, maybe a savings account that pays 1% interest while inflation runs at 7%. They're losing purchasing power every single year and don't even realize it. The path forward requires understanding three core principles. First, diversification isn't just about owning different stocks. It's about owning different types of assets that respond differently to economic conditions. When inflation rises, stocks often struggle, bonds get crushed, but real assets, commodities, precious metals, they tend to thrive. Balance matters. Second, timing isn't about predicting the exact top or bottom. It's about recognizing which phase of the cycle we're in and positioning accordingly. Right now, we're in a phase where paper assets are overvalued and real assets are undervalued by historical standards. The gap will close. It always does. The question is whether you'll be on the right side of that convergence. Third, and this is crucial, wealth preservation comes before wealth creation. If you make a fortune, but then lose it because you didn't protect it properly, what was the point? The truly wealthy focus obsessively on not losing money. They build fortress balance sheets. They own assets that can evaporate overnight. They sleep well because they've planned for chaos. I've spent my entire career studying what works and what doesn't. I've made mistakes. I've learned from them. And one lesson stands above all others. The market can remain irrational longer than you can remain solvent. Just because you understand that something is overvalued doesn't mean it won't get more overvalued. Just because you know something is undervalued doesn't mean it will rise tomorrow. Patience and positioning beat prediction every single time. This is why the silver surge matters. Not because silver itself will make you rich, though it might, but because it represents a broader awakening. People are starting to question the narratives they've been fed. They're looking for alternatives to a system that seems rigged against them. They're rediscovering ancient truths about money and value. The institutions know this. Central banks around the world have been buying gold at record rates. Why? Because even they don't fully trust the system they're running. They're hedging. They're preparing. And if the people who control the money printer are buying hard assets, what does that tell you about their confidence in paper currency? But here's where it gets really interesting. Silver has something gold doesn't. Industrial demand. Gold is primarily a monetary metal. People buy it to store wealth. Silver does that too, but it's also consumed. It's used up in manufacturing processes that can't easily substitute it with something else. This creates a completely different supply and demand dynamic. Every electric vehicle uses between 25 and 50 grams of silver. The world is pushing toward electric transportation. Solar panels use about 20 grams of silver per panel. The world is pushing toward renewable energy. 5G infrastructure requires significantly more silver than previous generations of wireless technology. The world is pushing toward faster connectivity. Do you see the pattern? The entire technological transformation our society is undergoing requires massive amounts of silver. And we're not producing enough to keep up. Mine supply has been essentially flat for years. The easy silver has already been extracted. What remains is deeper, harder to access, more expensive to mine. Meanwhile, above-ground stockpiles have been steadily depleted. We're running down inventory that took decades to accumulate. At some point, and that point may be closer than most people think, the market will wake up to this reality. When it does, price will adjust violently. Now, I want to address something important. I'm not telling you to bet everything on silver. That would be foolish. Concentration creates fragility. What I'm telling you is to understand the principles at play so you can make informed decisions. Maybe silver plays a role in your portfolio. Maybe it doesn't. But either way, you should understand why it's moving and what that movement signifies about the broader economic picture. The real opportunity isn't in any single asset. It's in developing a framework for thinking about money and wealth that serves you across all market conditions. It's about building what I call an all-weather portfolio, something that can handle inflation, deflation, economic growth, economic decline, something balanced and resilient. Most people build portfolios for the world they hope will exist. Stocks will keep going up, interest rates will stay low, inflation will remain moderate, the government will figure it out. Hope is not a strategy. You need to build a portfolio for the world that might exist. The world where things go wrong, where assumptions break down, where the unexpected becomes reality. I learned this lesson the hard way in 2008. I saw the housing bubble forming. I knew it would burst, but I underestimated how interconnected everything had become. I didn't fully appreciate how a mortgage crisis in America could freeze credit markets globally. The system was more fragile than I realized. Since then, I've made it my mission to expect fragility, to plan for it, to profit from it when possible, but more importantly, to be protected from it always. This mindset changes everything. When you expect fragility, you don't get caught off guard. You're not the person panicking when markets crash. You're the person who prepared. You're the person who has dry powder ready to deploy when assets go on sale. You're the person sleeping soundly while others lose sleep. The current silver surge is a symptom of underlying fragility in our monetary system. It's a canary in the coal mine. It's telling us that confidence is shifting, that people are looking for alternatives, that the old certainties aren't so certain anymore. Whether silver specifically continues higher or pulls back in the short term doesn't matter nearly as much as understanding what its movement represents. Let me give you a mental model that might help. Imagine the financial system as a dam holding back water. For years, central banks and governments have been adding more and more water behind that dam. Quantitative easing, stimulus programs, the water level keeps rising. Now, the dam has cracks, small ones at first, silver prices surging, gold breaking out, Bitcoin volatility. These are the cracks. The water is finding weak points. The question isn't whether the dam will eventually fail. Dams always fail when the pressure becomes too great. The question is when and how catastrophic the failure will be. And more importantly for you, are you positioned to survive and thrive when it happens? This might sound pessimistic, but it's actually the opposite. Understanding risk is the first step to managing it. And when you can manage risk, you can take intelligent chances. You can be bold when others are fearful. You can be cautious when others are greedy. This is how wealth is really built, not through luck or genius, but through disciplined application of sound principles over long periods of time. So what should you actually do? Start by educating yourself. Don't take my word for anything. Study economic history. Read about previous monetary crises. Understand what happened in Weimar Germany, in Zimbabwe, in Venezuela. See the patterns. Then look at your own situation honestly. How exposed are you to paper assets that could lose value in a crisis? How diversified are you really? Do you own anything that would hold value if the dollar declined significantly? Consider this your financial stress test. If inflation hit 15% next year, would your wealth survive? If the stock market dropped 50%, would you be okay? If interest rates spiked to 10%, could you handle it? These aren't wild scenarios. They've all happened before in major economies. They'll happen again. The only question is whether you'll be ready. Building resilience doesn't mean becoming paranoid. It means being realistic. It means acknowledging that the future is uncertain and positioning yourself accordingly. A simple framework I've used for years is to divide assets into categories based on how they perform in different environments. Some assets do well when growth is strong. Some do well when inflation is high. Some hold value when everything else is collapsing. You want exposure to all of these Silver fits into the inflation protection category. So does gold. So do certain commodities and real estate. These aren't assets you expect to double every year. They're insurance policies that happen to have upside potential. When paper money loses value, they gain value. When a confidence in the system wavers, they provide stability. This is their role in a balanced approach. But here's what most people get wrong about precious metals. They treat them like lottery tickets. They buy when prices are soaring and everyone's talking about them. Then prices correct, they get scared, and they sell at a loss. This is exactly backwards. Precious metals are long-term holds. You accumulate them slowly over time. You don't trade them. You don't try to time them perfectly. You simply own them as part of your permanent allocation. Think of it like home insurance. You don't buy home insurance because you think your house will burn down next week. You buy it because if your house does burn down, you need protection. You pay the premium every year even though you hope to never use it. Precious metals work the same way. They're insurance against monetary instability. You hope the system holds together. But if it doesn't, you're protected. The wealthy understand this instinctively. Go look at the portfolios of the truly rich. Not the celebrities who made money and spent it all. Not the lottery winners who went broke. I'm talking about generational wealth. Families who have stayed wealthy through world wars, depressions, currency resets, everything. What do they own? Land, businesses, art, precious metals, real assets that transcend any single monetary system. They're not smarter than you. They just think in longer time frames. They're playing a game that lasts generations, not quarters. And in that game, the rules are different. Preservation matters more than growth. Stability matters more than excitement. Boring often beats exciting when you measure results over decades. This brings me back to where we started. The silver surge isn't normal because we're not in normal times. We're in a transition period between one monetary era and the next. The post-World War II system of dollar dominance is showing its age. Other countries are tired of playing by rules that benefit America disproportionately. They're forming alternative arrangements. They're settling trade in their own currencies. They're stockpiling gold and reducing dollar reserves. This doesn't mean the dollar will collapse tomorrow. These transitions take time. But the direction is clear. The world is moving toward a more multipolar currency system. And in that new system, hard assets will likely play a bigger role than they have in recent decades. Countries and individuals who position for this shift early will benefit. Those who wait until it's obvious will pay premium prices. So here's my challenge to you. Stop thinking like everyone else. Stop following the crowd into whatever's hot this month. Start thinking in principles. Start understanding cycles. Start building a financial foundation that can weather any storm. Because storms are coming. They always do. And when they arrive, you want to be the lighthouse, not the ship getting tossed around. The silver market is sending you a message right now. It's telling you that smart money is repositioning. That confidence in paper assets is wavering. That people are remembering old truths about value and scarcity. You can ignore this message. Most people will. Or you can listen, you can learn, you can adapt. The choice, as always, is yours. I've given you the framework. I've shown you the patterns. I've explained the principles. Now comes the hard part, implementation. Because knowing what to do and actually doing it are two completely different things. Most people will watch this, nod along, agree with everything, and then do nothing. They'll go back to their lives. They'll keep making the same financial mistakes. They'll hope everything works out. Don't be most people. Be the person who acts on knowledge. Be the person who makes uncomfortable changes now to avoid catastrophic problems later. Be the person who builds wealth systematically, protecting it fiercely and passing it on securely. This is how legacies are built, not through luck, not through timing the market perfectly, but through consistent application of sound principles over time. The silver surge is just the beginning. It's a preview of what happens when monetary instability meets scarce resources. Watch what happens next in other commodities, in real estate, in businesses with pricing power. The great repricing has started. Position yourself wisely, think independently, and remember, in the long run, reality always wins. Paper promises fade, real value endures. Choose wisely where you place your trust and your wealth.